Hello, welcome to today's video about 2020 market crash. Please don't forget to like and subscribe. Let's start. In early 2020, the world was hit by an unprecedented event, the COVID-19 pandemic. Not only did it impact millions of lives, but it also had a profound effect on the global economy. The stock market, which had been experiencing a long bull run, suddenly crashed, wiping out trillions of dollars in wealth. In this video, we'll take a closer look at what happened during the 2020 market crash, its impact, and how governments responded. As countries went into lockdown to slow the spread of the virus, businesses across the world ground to a halt. The travel industry was particularly hard hit, with airlines and hotels seeing a massive drop in demand. Many retailers and restaurants were forced to close, and some even went bankrupt. This had a ripple effect on the wider economy, as companies cut back on spending and investment, leading to mass layoffs and a surge in unemployment. All this uncertainty led to a sell-off in the stock market. Investors were worried about the impact of the pandemic on company earnings, and many began to panic. As a result, the stock market plummeted, with some indices falling by over 30% in just a few weeks. The crash was sudden and severe, leaving many investors reeling. In response, governments around the world took a series of measures to stabilize the economy. Central banks lowered interest rates to encourage borrowing and spending, and many implemented quantitative easing programs to inject cash into the financial system. Governments also introduced fiscal stimulus packages to support businesses and households, with some offering direct cash payments and grants. These measures helped to prevent a complete collapse of the economy, but they also had some unintended consequences. As interest rates fell, investors searched for higher returns elsewhere, leading to a surge in demand for riskier assets like stocks and bonds. This helped to prop up the stock market, but it also meant that some companies were able to access cheap credit even if they were struggling financially. Meanwhile, the pandemic continued to rage on, with many countries experiencing second and third waves. This put further strain on healthcare systems and caused more economic damage, particularly in countries with weaker safety nets. As a result, some experts are warning that the economic impact of the pandemic could last for years, if not decades. There is some hope on the horizon, however. With the rollout of vaccines, many countries are starting to emerge from lockdowns and reopen their economies. This could provide a much-needed boost to businesses and consumer confidence, and could help to kickstart economic growth. The 2020 market crash was a result of the COVID-19 pandemic and the subsequent economic shutdown. It had a profound impact on the global economy, leading to mass unemployment and a sharp decline in the stock market. Governments around the world responded with a range of measures to support businesses and households. But the economic fallout is likely to be felt for years to come. As we look to the future, the rollout of vaccines provides some hope that we may be able to move past the worst of the pandemic and begin to rebuild our economies.